I just want to remind everyone that the instructions for this package, for the newer forms or things that have changed, I've added a lot of descriptions and guidance, and there is a glossary, which almost everything has a link that you can click on to bring you there. But for this, I kind of went through this last year. I'm only going to go over the parts that I feel like people are struggling with, or they're still kind of new and people might still be struggling. So the first one, this isn't going to apply to very many people, but if you are an agency that is in SKIS, which for reporting package agencies, that's mainly just the legislative agencies. But note here, it's going to tell you to fill out this form. This form has been reformatted. It has not changed significantly in how it asks the information. There are a few new asset classes added, just to make sure everything's covered, even if none of you have it now. This will help future-proof it. This also will make it work better in Workiva, but it also helps me collect the data more easily than the way it was organized before. So again, it looks different, but really isn't that different. It's just laid out differently. So I'm not going to spend a whole lot of time on this because, again, there's only about 5 agencies that use this. But if any of you need assistance with this, hopefully you all know you can call me because you usually do. Question 6. This was added last year because of the new form. And I was surprised at how many people put no to this question because I know who has a balance in this GL account. So that was a little frustrating for me. So please make sure you actually look and check and see if you have a balance in this GL account before you respond. Because if you put no and you do, your package is going to be rejected. But if you have a balance, you put yes, it directs you to complete this form. Again, this form was new for last year. I added a few minor things, but for the most part, it is the same. And all these ones that have blue, you could click on. It should take you to the spot, but you might still have to scroll down. It does click on the part of the instructions where the information is, but the instance is just if you have to report multiple line items for the same project, maybe because you're going to end up with, as the example earlier, maybe you're doing a project for multiple sites, you probably should break that out line by line. Or if you have multiple funds, you might have to break that out line by line, but if it's all the same project, you would just have one for all the applicable lines and move on to the next one. Anticipated completion date. Again, this is anticipated, meaning it doesn't have to be definite, but I do need you to put something, and keep in mind that if you put a completion date that's prior to 6/30/2025, and you haven't answered any questions saying you have a project that's completed that you didn't move, I'm going to immediately ask you about that. So make sure you're aware of that and trying to put it as accurate of a completion date as you can. Total project budget is one that I added, sorry, this year. And this would just be the total amount you're expecting to pay for the entire project, which would include the amount you've already paid, plus the amount expected to be paid to complete it. Again, this might be obviously somewhat of an estimate, but try to provide as an accurate a number as you can. And you can use, your A1 forms if it's that type of project, contracts from the vendors, purchase orders, whatever, to to determine that. And I mean, hopefully in most cases you do have a project budget amount because you need to know that you can pay for it. Project number, again, that's another one. That's just going to be the 4-digit project number you get from EBO. I think you only get them if they're EBO projects. I don't know if you would get them from skis. So if you don't, you just put NA, but the other ones, please try to provide that. And I think they usually begin with a 9. The WBS element, this one is not optional. All of them should have it, and unless you're a legislative agency that's not in skis, but everyone else, you should have a WBS element, and it's very important that you put that. The current capitalization amount versus the current expense amount. I'm going to go over this again because I think some people are still a little confused about it, and it is a little confusing. You're going to have, you know, a total amount in your AUC balance. Let's say it's $100,000. And if everything in there is supposed to be capitalized and there's no errors, then you would just put 100,000 here. But let's say you realize you have 25,000 that was put in there incorrectly. For whatever reason, it needs to be expensed, but you haven't actually expensed it in skis yet. You'd put that amount here. But these two added together should equal your total AUC amount for that project or that portion of the project if you're doing multiple lines. If you have something that requires an adjustment, please try to kind of mention that in the comments. It would also be helpful if you added it to this adjustment column, but it's not the end of the world as long as you do provide me some contacts. And I might be calling you anyway if I need more information, but that's it for this part. You also have to make sure that you're entering these amounts. This is just what it is on your asset history sheet, what it is in skis. Want to make sure those amounts are the same. If they aren't, you'll get this asking you to attach a document explaining why it's not. And then at the bottom, you're going to have everything you put on here total, and it's going to compare it to the AUC balances for skis. If there's a variance, you're going to be directed to correct your form because something's wrong. A few cases we had like a little rounding differences that we kind of finagled to make that go away, but there are other cases where some things were missed or put in the wrong column. So you have to make sure that that's correct at the bottom, or it's another situation where your package might be rejected initially. Okay, so the intangible AUC, I did kind of go over that in the last training. And we do have something in the manual. It kind of directs you to the point of when it should be capitalized. I can pull the manual up after I'm done with this and show you real quick though. And, you know, software gets pretty complicated. I'm sure most of the people in here were not software experts. So sometimes it is not easy to determine. But I'll show you the guidance as best I can and go from there. And okay, I'm going to type in something because I guess my pointer is not showing as well as I thought it was. But let's say, going back to that example, you have a project that your current AUC balance is $100,000. If it all should be capitalized, there are no errors, you put 100,000 here. You wouldn't put anything here, and then you would have that total come up. But let's say you realize that 25,000 of that was incorrectly capitalized and that needs to be corrected. You'd put it here, and you'd still end up at the same total as you should, but again, you would use different columns to specify that to help communicate to me that it's not fully correct so we can fix it. Denise, does that answer everything for you? Okay. Also add, I went over this last time too, but this just has all the different asset classes, and maybe if you have a situation where the entire project is incorrectly capitalized, you'd put in a, like maybe you have an HVAC replacement that shouldn't have been capitalized. That's when you'd use NA there. I think that's it for this form. Any questions? Okay, SBITAs, this can get a little complicated. Someone wants to clarify the SBITAs. We have situations, we actually at our office had this situation with Workiva, where you're gonna subscribe to some software, pay a yearly or however often payment to have access to the software for a defined benefit of time. But maybe you have to do some setup initially to get it to the point where it's usable. So until it reaches that point, and this is actually pretty similar to the question Denise was asking. So I'm still going to pull this up because I think now that I have two questions, we should revisit it. But all those costs for the development, even if some of that might include maybe a first or second payment for this SBITA license, that's all going to go into an AUC. We'd create an iProject in SKIS and accumulate the cost in AUC. And then once you get to the point where the SBITA is now ready for you to use, ready and available for its intended use, you would move it, but the cost you accumulated to the SBITA asset, you'd also, add the rest of the value you need to for the remaining payment schedule. And if you have something like that, obviously contact us. We can help you through it because it is a little more common than I thought it would be, and maybe it's going to continue to get more common, but it's not like every agency is dealing with it either. Linda, does that answer your question? Okay. Okay, I'm gonna move on and go back to the questionnaire. So question 5, which is asking about you making necessary adjustments from your inventory to the ledger or SKIS in most cases. And you have to put a no. That's going to direct you to complete form 3.08.3. There's also a question towards the bottom asking if you need any adjustments to the beginning balance. But yes, it's going to direct you to do the same thing. Now, you might have some cases where you have some sort of adjustment you need to report that maybe doesn't exactly result in a yes to one of those questions. But if you need to report an adjustment and a question hasn't directed you to do so, I would just put yes to number 5, just to make sure, no to number 5, just so you have that pop up. So I know that you're filling out the form, just in case I forget to check. And some of you, you've probably dealt with me directing you to do that for some weird things that really didn't have anything to do with your inventory necessarily. But with that form, this is another one. I didn't change anything it's asking, but I did remove all of these spaces in between. So I'm just going to give you a few examples of adjustments you might be reporting. Let's say you had an HVAC replacement that's an AUC that shouldn't be, needs to be expensed. We currently have $75,000, and it needs to be 0. If this was all done in the same fiscal year, you hit acquisition. If it was all done in a prior year, you do beginning. If it's a mix, it would be helpful if you broke it out and put, whatever amount you added that year on a line for acquisition, whatever was in beginning balance on a separate year, but you can also just do other if that is too burdensome. But it does really help me out because I will have to go back and figure out those two things on my own if you don't. But in this case, we'll just go with acquisition. And because of the AUC, we don't have any accumulated depreciation. And you would just explain that HVAC was incorrectly capitalized in AUC and should be expense. Maybe you have a situation where you knew it shouldn't have been capitalized, but the wrong WBS element was used by mistake. You could put that too. That does happen. And I didn't fill it in, but please still provide the fund and the asset number. Those are required and very helpful for me to have. Another example, couple those inventory adjustments I was talking about. Let's say you found a Chevy Tahoe during your inventory that you didn't get corrected in skis before fiscal year end. And you paid some ridiculous amount for it. Oh, sorry, but it wasn't in skis yet. So you need to add it. We'll say this was in the current fiscal year. Again, you do acquisition. But if it was, let's say FY24, you could put beginning, because that corrected amount in this particular case for the historical cost, that's not going to change. But you would need to calculate the depreciation. And again, you would just do that by taking what the useful life would be. Let's say the truck is in years. You would divide the 40,000 by 120 because you need to do it monthly, and then just multiply it by the number of months that have passed from when you placed it in service until now. In this case, it would probably still be helpful to break out beginning versus we put other, but the accumulated depreciation that would have been occurred for this fiscal year versus any amount that may have been occurred prior to that. And you just put something like asset was never added to skis, but purchased in July of 2025. You could even add a document number for the purchase. That's always helpful on my end too, if you can. On the flip side, if you find out that you had a Tahoe on the books, but you got rid of it a while ago physically, you kind of just put the inverse of what I had. I'll say this was a prior year. So we'll do beginning. Again, you might still need to, we'll say this is way far back, so we'll just keep it simple. We'll do beginning. Let's say it was fully depreciated at the beginning of the year. You just put that it should be 0. And again, like the last one, explain it. You can provide a doc number. Like sometimes you do correct it, maybe not at the end of the fiscal year, but the next fiscal year. It's also helpful to mention that, and any document numbers you can provide to help with that. The last example I'll give is that example where you're purchasing a copier in May. So we'll do copier, machinery, equipment. Maybe this is a situation where you still haven't paid the invoice yet, so you don't have the asset number. If you don't have an asset number, you can put NA and kind of explain that. But if you do, please provide that. Again, it's required. But it's not in skis yet at 6:30. And you know you're paying 7,500. This would be an acquisition. And then depending on when it was placed in service, you would determine the accumulated depreciation for that point. So those are 4 of the most common examples. Sometimes you need to correct just the asset class. There's other weird examples I can't think of, but anything that's making it where the cost is off, the depreciation's off, the asset class is incorrect, the timing of when it's capitalized is off. All of these most likely result in adjustments you need to report here. So any questions about that? Next part, I need skis, so I'm going to start pulling that up. It's not something I could pull up ahead of time because it would just time out. Nothing? I thought I'd get a little more than that. Okay. Okay, so someone asked, would we only do items on this form if we need to change after year end though, correct? We discover we need to do these changes before 6:30, do we still need to report in the package? So if I'm understanding the question right, if you discover it before year end and you correct it before year end, you most likely do not need to report it unless, again, it's a situation where maybe this impacts prior fiscal years. So if you have a situation like that, just call me and I'll let you know. But if you have a situation where you realize it before fiscal year end, but you're not able to get it corrected in skis, you will have to report on here no matter what. Does that answer your question? Okay, good. Any other questions? Okay. This part might get a little tricky because I'm going to have to flip through a few different screens. I'm going to do my best. But this is the worst part of this package. I know it's not fun to do. This report evaluation section. So for most of this, you're comparing your asset history report to ZGLA and skis or a few other modules and ECC skis. So first thing you need to do is look at your asset history report and make sure it's right. Out of the two, in my experience, it has been the most correct. Occasionally, it's not, but that's pretty rare. However, the GL is more likely to have things that may put it off because if you make an adjustment directly to an asset account, but not the asset subledger, which is what the skis asset history report is reporting on, that's going to create a difference. So that's why you should never just make adjustments to those accounts directly. It should be done through the skis asset module. So let's say we did that, and that looks good. The next two, we're going to be comparing the asset history report to the ZGLA. Yeah, pulled up skis, but it didn't open, so give me one more second. I am going to be using some examples from FY24 for P160 because they were nice enough to let me use them as an example. So this first question, we're looking at the acquisitions plus transfers in on the asset history report and comparing them to the debits on the ZGLA for the 1801 accounts. And again, you should not be looking at low value asset accounts because those aren't capital asset accounts or asset accounts of any kind, or AUC, just because those function a little differently. You wouldn't be making those adjustments. SKIS does. So we get to see the ZGLA pulled up. I think there's lots of ways you can do this. I'm sure some of you have learned that SKIS, there's many ways to approach things. This is just the way that I know. Honestly, I learned in auditing, but it does seem to be, even though it might be a little tedious, a little more helpful if you need to actually dig into things. So I'm going to pull, no, not that one. I'll pull over the asset history report. I just reran that and copied it into an Excel. This is their asset history report for FY24. I went ahead and added up what's called debits and credits, but the acquisitions are added to the transfer debits here, and the retirements were added to the transfer credits in the credits column. I bring the ZGLA over and angle this a little where you can still see most of it, hopefully. A little bit. I do, this is just me being paranoid, but I do usually just check each asset class to make sure there isn't anything popping up that I would have missed, maybe because we've got offset by something. But, you know, as an agency, you're more familiar with your operations, so you might know for sure you had no activity in your land account. But I'm just going to skip ahead to building improvements, because I know this is one of the ones that had what we're looking for to add to that form. So I go to building improvements on here. I'm going to look at my total debits, and I'm going to see that my total debits and ZGLA for this equals 1.7 million. But if I go over here, it equals 888,000. So I know I have something I need to report there. And then on the flip side, I have 0 credits here, or again, the sum of the retirements and transfer credits, but I do have one here. So going back to the package, just this one asset class causes me to answer no to both of these. So I know I got to do that form. So I'm just going to come over and pull this form up and just go through it knowing that. So I'm going to move some of this aside just because it's difficult for me to do it this way. But for the building improvements, I had the 88307. And the retirements and all that, I had 0. And I'll go ahead and put The GL accounts. Account descriptions. For these, please try to keep the comparison of the acquisitions and transfers in with the debits on a separate line from the retirements compared and transfers out compared to the credits. I'll show you why in a second, but it just makes things easier from a check standpoint. For that, we already have 0. So I know I have, everyone can see this, so I'm going to move it again. Hopefully you took note of where I'm getting those totals. I have that. And then you also have to make sure if it is a credit or retirement or whatever, that you're doing those as the negative amounts. So I got all that in, and I can see that I do have variances, but they offset with one another. So that is a good indication that I don't have a real problem. This is just a normal transaction. So I can dig in and pull up all the transaction data. And I'm just going to sort it by document number and kind of find what looks like is probably an issue. And I can see right here, I got some negative amount. And in this case, I'm lucky, they're all in one transaction. So I can pull that up. And once I do, I can see this was simply a reclassification entry. It looks like they were just changing the order number. But they weren't making any adjustments to the GL for GL account or fund or anything that you would need to modify in the asset module. So for this one, for the details, I would just put reclassification entry, or put journal entry, reclassify, and I'd put the document number. And sometimes you'll have it where maybe you have a payment document that got reversed. So it shows up as an extra debit in ZGLA and extra credit. But you still basically do the same thing I just did. You would just have a different reason for your details. And unfortunately for some agencies, this can be a little more complex where you end up having a few different reasons why this is happening. So you kind of have to pinpoint all the reasons and try to provide all of them in the document numbers. And this is just to make sure that we don't have any adjustments to the GL that need to be taken off, because if we don't catch them immediately and they sit there for years, it can be a really big problem trying to get them removed later, because it can be harder and harder to figure out why they were put there to begin with. And some agencies probably have that issue with a few assets. I think it's mainly related to conversion, but this is kind of a control to make sure that that doesn't happen again. So I'm not going to go through the entire GL, but basically that's the process. You would go asset class by asset class. If you really wanted to, you could probably do like a total for everything just to see if you have any variances. If you didn't, you might not need to go asset class by asset class, but if you did that, you have to make sure you're excluding your low value asset account or accounts. Looks like we have 2 over here, and your AUC account. So any questions about this? This is something I've had a lot of people I had to kind of walk them through. Like I said, there might be a much better way of doing it. But I've always done it this way because I really want to double check everything, but also, like I said, if there's a variance that pops up, I can just dig in deeply and figure out what's causing it. And I would also like to add that some agencies will provide this information in a different form. Please make sure you're putting it on this form. That's not helpful for me because I have to try to incorporate it with the rest of the data and it may not be in the same format. Really should be on this form. And once this gets in Workiva, you're going to have to do that anyway. And in case anyone doesn't know this already, this package in particular will not be in Workiva this year. That's why you're still seeing this old version. It will most likely be next year. I don't want to say that with certainty though. No questions with that. I'm going to go and answer these last two. The next one has you compare your asset history to, I believe this is ECC's asset history. If I can type it correctly. I really should save this to my favorites, but I never do. Okay. So I guess I close out of the paper. Asset history. Give me 1 second. Okay. So this one we're comparing the beginning balance. Yeah, beginning balance on the asset history to the asset history in ECC. So because I was doing 2024 for P160, I'm going to stick with that. Just make sure when you're doing this particular step, you got your business area, you got the applicable fiscal year, and you have to change this to 20. You don't remember, you can click this and click 20, but it should say full accrual and not modified accrual. And this last part's personal preference, but I usually select main numbers only. I'm just going to do a few of these, but the beginning balance, and this is going to be the APC fiscal year start. So for land, it's 498,400, and that's the same thing I have here. I'll go down. Actually, I don't think I selected the version I wanted. Okay, that's better. You could select another one if you want to dig in and get more granular, but this is just by asset class. So if I go to buildings, I see it's 38,196,358.57, and that agrees here. So you just go through and do that for everything. This one you should do AUC, but you would not do low value assets. And then I'm just going to say that's a yes. But for some reason it was a no, you would have to do a help desk ticket number with SKIS because they're going to have to figure out what's going on and correct it. The last thing is, and you may want to actually open 2 instances of ECC for this, but you're going to do this other transaction. I think it's a depreciation comparison report. On the wrong one. So that's one. And that's two. So basically, we're going to compare the 01, which is the modified accrual acquisition value, to the full accrual acquisition value. I have both of these pulled up. Kind of similar to the other one, you're going to put in your business area in each one. I'm going to stick with 2024 again. This one I have everything I need, but this one is the one I need to change to 0. For this part, you would just compare the acquisition value for each line and make sure it's the same. And again, this does get tedious, but if for some reason it was off, we would need to get it fixed immediately. So it is still very important for you to do. And just like the other one, you do this for everything but low value assets, but this one would include assets under construction. And it has the same result where if you put no, you need to do a skis help desk ticket. If you have yes, you would just keep moving on. I like the farm equipment picture we got in the chat. So that's that for that section. Last section, and this is the last thing I'm going to cover unless someone wants me to talk about anything else, and pulling up the intangible SBITA stuff. The commitment section, there still seems to be a lot of confusion with this for a couple of reasons. One, we have commitments you have to report on this package, and you have commitment to report on the miscellaneous loss amendments and whatever the third category is in that other package. It's the 3.16 package. For that package, it's basically going to be all your commitments that do not relate to capital assets. I think in most cases, it's usually grants. This one, and it tells you all the different categories, so you don't forget anything, but you have construction commitments, which would be capital projects or repair and maintenance projects. Commitments for software development, and again, that would be software that you will own. It's not a SBITA. You have commitments for the development of software that will be capitalized as a SBITA, or just an executed signed agreement that will be effective after June 30th and capitalizes SBITA after June 30th, but you signed it and committed to the agreement prior to June 30th. And that's the same thing with leases. I don't think you would have any kind of development for leases, but the second part's identical. And the last one is executed signed contracts for the purchase of capital assets after June 30th. I want to clarify that all of this should not relate to costs that have not yet been paid. You haven't paid them, and you don't have a payable form, meaning you've already provided the goods or services, you just haven't paid them. This is just, I am committed to pay it, but nothing has actually happened yet other than that promise that I've engaged into. So this first question, if you have any of it, regardless of amount, you put yes, and you would go to the next question. If you had nothing, you'd put no, and it would tell you to skip ahead. So once you do that, you need to know if you have anything over 100,000 per category. So each of the 6 categories. And these are some of the ones that have additional explanation. But capital projects are pretty much going to be the things you're capitalizing, buildings and planned improvement type stuff. Repair and maintenance would be the stuff that, even if it is a capital project for EBO, maybe it's not being capitalized from an accounting perspective. That would go there. Software development that's not a SBITA, that'd be here. The SBITA and lease ones would go here. And I want to clarify for these two specifically. I know this is confusing, so I updated this. So even though you're reporting on something that would eventually be capitalized as a lease or SBITA asset in accordance with GASB 87 or GASB 96, the commitment amount specifically, it's going to be the total amount you're committed to pay per the lease or subscription agreement. So the lease or SBITA asset will only be capitalized at the present value of the payments expected to be made during the lease term, or the sum of the principal payments per your lease or SBITA calculator. The commitment amount that you're reporting here is going to include the interest portion. And the main reason I realized that I wasn't clear enough about this last year is we did have some pretty substantial building leases where this made a huge difference. So again, I know this is a little complicated, but for the commitment part, you're just thinking about how much you're gonna have to pay. And this is just going into a note disclosure in the ACFR where we're just saying we're expecting to pay this much related to this type of asset, even if it's not necessarily going to be capitalized. And that kind of goes with the repair and maintenance. That's not going to be capitalized either in most cases. But we're still disclosing we're expecting some significant outflows in subsequent fiscal years. So I think those were new for last year, and then the purchase of capital assets was added next year. And this is just, maybe you're buying some cubicles that can be pretty substantial in cost, or maybe you're buying several vehicles or several pieces of really unique equipment, whatever it is. If you have a commitment to that, and that can be a contract or that can be a purchase order, because to my knowledge, in most cases, purchase orders are basically a contract for the state. You are, in most cases, obligated to pay them. You need to kind of determine all those type of purchases that you've entered into. The transaction actually hasn't occurred yet. And if it exceeds 100,000, you would report that here. And each of these, it's 100,000 per category. It's not total, per category. Another thing I'd like to add, because we have this form where you're reporting your AUC, and you're now reporting a total project budget, if I notice that it looks like you still have about 100,000 or more left on the project, but you don't have a commitment over here, that's going to be another red flag that I might be contacting you about. So please also try to keep that in mind. And if you have any SBITA or leases that are already capitalized at 6/30, you're not going to report the remaining amounts in the commitments for those. This is just ones you've entered into the lease agreement prior to 6/30, but you haven't actually capitalized the asset or started using the asset. I think that's it for the package. Any questions on that? I'm gonna real quick try to show you the section about intangible assets. If you go to the CBITA training materials on our website that are kind of in a different section, it has it there too, and I think there's essentially the same word for word. If I can find it. Okay, yeah, so it starts page 45. It goes on to page 46. It has kind of 3 major stages. The stuff in the preliminary stage, you're going to expense those as incurred. And that's usually kind of we're still trying to decide what we want, more of a fact finding kind of stage. And then once you're actually designing the software, writing code, maybe installing hardware that you're putting it on, doing testing, that's all in the development stage. And those are all the costs you're capitalizing, but you would cease to capitalize them once the software is operational. And that would be when it's ready and intended for use. Now, a lot of software, you might get to the end and it's operational and maybe there are a few things you want to tweak here and there. Just minor updates and changes don't necessarily mean the software is not operational. If you've done testing and you realize there's some major flaws in the software and you got to go back and revise some code, that's more of, you're still not at the point of being operational. And once you do get it capitalized and it's operational, you might have training or maintenance after that fact. You do not add that to the cost of the asset. You expense that as incurred. Occasionally you might do significant modifications to the system or add on, maybe like additional programs that interface with that or kind of like sub-programs. Those would be capitalized only if they increase the software's functionality and that the cost for all that exceeds $100,000. Again, this is all true for CBITA. You can go on the website to double check that in case there maybe is 1 or 2 things are slightly different, but I'll bring this over here. And to get to here, it's still under guidance and forms for state agencies, but there's a whole section for GASB 8796. This is the one, sorry. This in here, I think, has basically verbatim what I just showed you. But I want to make sure there isn't anything that's significantly different. Okay. So there's a section on here about it. I don't think it goes in quite the same level of detail. But again, it's verbatim what this is. Maybe just a little less detailed. Again, I know this can be complicated. You aren't really sure about certain costs, you can contact me. I might also recommend, if you're able to maybe get with someone in your IT department if you have someone there that is more of an expert on this, because I definitely am not an IT expert, and they can kind of help you decide maybe where some of these points are.